Greetings everyone. After discussing about the allowances, in the previous session we discussed the basic concept and the allowances which are fully taxable. We took all the heads which are fully taxable and discussed them in detail. Now we move on to the second category, which we call partially taxable allowances, or maybe exempted to a specified limit, or maybe taxable to a specified limit. So now we proceed further. So certain allowances are not fully taxable. They are not fully taxable under the head income from salaries. Instead, they enjoy partial exemption under a specific provision of the Income Tax Act. This we discussed in the previous session itself. These allowances are intended to reimburse employee for certain personal or maybe employment related expenses, and the most common among these are some of them which we are going to discuss in detail. Some of the popular ones are maybe entertainment allowances, maybe house rent allowances, etc. So we are going to discuss them one by one in detail in order to understand them better. And all these partially exempted allowances are categorically to be calculated. So there is a calculation part involved in this, which we have to follow certain rules and steps in order to get the actual amount of exemption. Deducting that exemption from the total receipt, we get the taxable amount. Okay, so first we will discuss in detail about the house rent allowance. Coming to this house rent allowance, or HRA in short, it is an allowance which is granted by the employer to the employee in order to meet the expenses incurred on the payment of rent for a residential accommodation which is occupied by the employee. However, the entire amount of HRA received is not always exempted from tax. The exemption is restricted to the least of the following. Least of the following three amounts. There are three figures that have to be taken into consideration as prescribed under the Rule 2A of the income tax rule. So the amount, what are the three things or three specific points that are to be considered? The first is the and we have to consider these three amounts, and the least of the three will be exempted. The exemption is the least of the following three. The first is, as before you here on the slide, we have actual HRA which is received by the employee during the relevant period. Or second is the second point. First is actual HRA received, so you just have to note them down. Then the second point is rent, which is rent paid minus 10% of the salary for that relevant period. And the third point to be considered is 50% of the salary or 40% of the salary. Now, what is this 50% in what situations? 50% if the employee resides in a metropolitan city. That is Mumbai, Delhi, Kolkata and Chennai. So if the accommodation is situated in metro cities, then only they are allowed the amount of 50% to be considered, Mumbai, Delhi, Kolkata, Chennai. Otherwise if they are residing in a metro cities, then it is 40% of the salary. That is all over India. Apart from metropolitan city, if the resident is anywhere else, it will be the amount of to be taken into consideration is 40% of the salary. Now here these are the three things. We will compute actual HRA received, second rent paid minus 10% of the salary, third is 50% or 40% of the salary depending upon where the house is or where the accommodation is situated. But some important notes we have to take into care while deciding these things. That is, if the employee, he lives in a own house, because it's not necessary if you're working somewhere you have to take the accommodation on rent only. Maybe you get the job in your own city where you already have a house. So if you are living in your own house and do not pay any rent, then the complete amount of HRA that is received becomes taxable. You don't have to go for calculating the exemption amount. Secondly, where the rent paid is excess of rupees 1 lakh rupees per annum, then the employee must report the PAN of the landlord to the employer for claiming the exemption. So if the rent is above rupees 1 lakh, you have to get the PAN card of the landlord. Then another important here, we have talked about in the 2 points, second and third one, certain percentage of salary, that is 10% of salary, 40 or 50% of the salary. But then what is this salary amount? How do we consider? What do we consider as salary? Here the salary will include the basic salary. To this we will add the dearness allowance if considered for retirement benefit. We will also include the commission if paid as a fixed percentage of turnover. We add all these three things to get the total salary, and here we exclude all other allowances, maybe or perquisites or bonuses. They are not to be included. So in a question, if you are given any figure for any other allowances, any other perquisites, you will not add them up. And the term relevant period here means the duration for which the employee actually occupied the rented accommodation during the previous year. So these are some important notes that must be taken care of before computing the figure. So first important thing you must be knowing here is that it is the basic how to compute the salary, because that salary plays an important role, because on that only you will be computing the 10% or 40% or 50%. So that is important thing. Then what if he gets 1 lakh rupees, he is paying more than 1 lakh rupees as rented income, then you have to provide the PAN card. To understand it better, let us discuss few examples or illustrations here for a better understanding of the calculation part. It says illustration 1, employees living in a metropolitan city. The illustration says that the employees living in basic salary is rupees 50,000 per month, DA forming the part of salary is rupees 10,000 per month, HRA received is 20,000 per month, rent paid is 18,000 per month, and the Delhi city is Delhi, that is, it is a metropolitan city. So if it is a metropolitan city, we immediately should know that it is your 50% of the salary is to be taken into consideration. So for calculating this, the 3 points, let us first do some rough work which we will be doing here. A rough work. Here, so first we will, because here we will have to calculate the salary amount for computing 50% and 10%. So for salary, calculating the salary, here salary is equal to, the formula is your basic salary plus, or maybe I'll put it here, salary is equal to basic salary plus DA if it forms the part of salary, plus commission if it is there. But in this question there is no mention of any commission, there is no data of any commission. So therefore the salary amount will be it will be here basic salary in this question is 50,000 plus DA is rupees 10,000. So the salary to be taken up is 60,000. Secondly, then let us do it here. The 3 things that are to be compared, it is first actual HRA received. Actual HRA received here in this question, it is 20,000. Then the second point to be taken into consideration is the rent paid minus 10% of the salary. Rent paid minus 10% of salary. So 10% of 60,000 will be, it is 6,000. It is 6,000. So rent paid is amount is 18,000 minus 10% of salary is 6,000. So this comes out to be to 12,000. Third point, that is 40 or 50%. Here he is living in Delhi metropolitan city, and therefore it will be 50% of salary. So 60,000 into 50%, it is 30%. 30,000, sorry, not 30%. So it is 50% of salary, which is equal to 30,000. Now, the formula or the rule says that the least of the above will be the exemption amount. So, what is the least? We will compare 20,000, 12,000 and 30,000. Out of this, least of these is 12,000. So, this 12,000 will be the exemption amount. Now, when we talk about the exemption as 12,000, let us see that what will be the HRA, means a taxable HRA. The taxable HRA received is HRA received is 20,000 per month. That means for 12 months the total HRA received is 2,40,000. So, we will take into consideration the exemption amount, and then we will be computing that. So, it is 12,000 per month will be, this is for 1 month. We will calculate it for annual basis into 12. So, exemption is equal to 12,000 into 12, which makes it 1,44,000. 1,44,000. So, this is HRA received, this is the exemption. What is taxable amount? Taxable HRA will be 2,40,000 minus 1,44,000, which will be equal to 96,000. So, this is how we receive or we compute the taxable HRA. I hope it is clear. I just go once again. Actual HRA received is 20,000, rent paid minus 10% is 12,000 and 50% of the salary is 30,000. See, you have a choice. Either you do every calculation on monthly basis, or maybe here itself you just multiply them by 12 and do it on annual basis. Since it was all calculated on monthly basis, the least of the three, that is 12,000, was taken as, will be decided for the exemption, and the actual HRA received minus this exemption will be your taxable HRA. Now, moving to the second illustration, which talks about the person living in a smaller city than metropolitan, or maybe we can say non-metropolitan city. The data here says that it is basic salary is rupees 40,000, DA forming the part is rupees 8,000 per month, HRA received is rupees 15,000 per month, rent paid is rupees 12,000 per month, city is Lucknow, obviously it is a non-metropolitan city. So, let us compute the taxable salary. Total salary that he is getting is 48,000 per month. Let us compute the salary part. There is again no commission here. There is no commission here in this question. We have only the basic salary. So, basic salary is rupees how much? 40,000. Plus we have the DA, it is 8,000. So, obviously as I said, it is 48,000. And this amount is per month. Okay, 48,000. Now let us take into consideration the 3 points. First is actual HRA received. Actual HRA received is 15,000 per month. So it will be maybe let us do it on annual basis, or maybe we compute it this way. It is 15,000. Second point is rent paid minus 10% of salary is rent paid is 12,000 per month, and the 10% of 48,000 is 4,800, and this comes out to 7,200. Then the third is your 40% of the salary here, 40% of salary. So 48,000 into 40%. So here 40% of salary will be calculated as 40% of salary will be 19,200. Okay. Now we compare which is the least, 15,000 or 7,200 or 19,200. So again this part is your 7,200 is the least. So therefore for this should be taken as the exempted amount. This is the exempted amount, and therefore for calculating the total exemption, the total exemption is rupees 7,200 into 12 months for the complete year. This comes out to be 86,400. 86,400. So now we will do the taxable HRA will be what is the total income? It is the total salary. It is total salary is rupees taxable HRAs. Total HRA received, that is 15,000 into HRA received is 15,000 per month. 15,000 into 12. 15,000 into 12, that is 1,80,000 minus exempted amount is 86,400. The balance is 93,600. So 93,600 is the taxable HRA. Okay, so this is how we compute. Now similarly on the third example or illustration we have you have before you is the employee when he is living in his own house. Then how do we consider that? If an employee receives suppose 10,000 per month as HRA, but he lives in his own house and he pays no rent, then obviously as said that he will be in this case the HRA received by him will be fully taxable. There is no exemption in this case, and the reason is that since he is not paying any HRA, he is not paying any rent, he is living in his own house, and therefore whatever HRA he is receiving he will have to pay the taxes on it. So it is fully taxable. This treatment, this case, if he lives in a own house, this comes under the fully taxable allowances. So here the entire amount he receives rupees 10,000 per month. So 10,000 it is, we can say that the entire into 12, 1,20,000 will be taxable part of the salary. So I hope this is clear to all of you. Let us move to next illustration, a little bit of more comprehensive one. We have it here that Yogesh is employed at Amritsar employed at Amritsar on a salary of rupees 24,000 per month. The employer is paying HRA of rupees 2,800 per month, but the actual actual rent paid by him is rupees 4,000 per month. So, employer is paying him 2,800, but he is paying out 4,000. But at the same time, he is also getting commission, 2% commission on the turnover achieved by him, and the total turnover is 12 lakh. We have to compute his gross salary. We don't have to compute the HRA part only, but we have to, in this question, we have to compute the gross salary. So that means we have to calculate other heads of the income also under the head salary, if they are there in the question. So this is your rough work. Okay. Now coming here, it is we have to compute first of all what is the total salary that he is receiving. 24,000 per month into, this is the salary, is 24,000 per month. So when we multiply it by 12, let us calculate 24,000 into 12, we get 2,88,000. So maybe we can start doing the question, that is computation of gross salary (25). Here it is, first we will put salary, which comes to 2,88,000, and after salary he is also getting 2% commission on rupees on turnover, which is commission, rough work we will just calculate. It is commission is 12 lakh, on which 2% is paid as that. So 2 lakh 40, it is 24,000. Okay, 24,000. So the second part is commission, it is 24,000 rupees. After then we have the HRA that has to be computed. For this again I think we will have to work out here. Maybe we can compute the HRA in this corner. Now here we have to compute the three figures, out of which the least is considered. So what is the total amount that he receives for HRA? It is employer is paying him rupees 2,800 per month. So on the basis of this, if we just calculate this part, 2,800 into 12, 2,800 into 12, it is okay. So the first point is HRA received, actual HRA received, it comes to 33,600. Then the second point is rent paid minus 10% of the salary, rent paid minus 10% of salary. So rent paid is amount, he is paying 4,000. So 4,000 has to be calculated. That means for 12 months it is 4 12s are 48,000, and 10% of the salary, his total salary is 2,88,000 plus this amount 24,000, because there is no DA in the question, but these are the two amounts that have to be added together and we get here is total is, let me use the calculator here, 2,88,000 plus 24,000. So we get 3 lakh, the total is 3,12,000 as the salary for the calculation. So 10% of this is 3,120, 3,100 to 31,200, sorry, 31,200. So the difference between the two is 16,800. So this is the second figure. Third is he is living in Yogesh is Amritsar. So it's a non-metropolitan city. So we will say that 40% of 3,12,000, and this 40% of 3,12,000 will be 1,24,800. Now we have to compute the least of the, see the difference between the two. In the previous questions we compared these three figures on the basis of months, monthly basis, and then we multiplied the exemption into 12. Here we have been converting them into annual figures from the very beginning and then finding out the least of the three. So the comparison is between 33,600, 16,800 and 1,24,800. So the least of the three is again 16,800. So the taxable HRA will be, taxable HRA will be maybe the total amount that is received as HRA, and the total amount received was 4,000 sorry, no, 2,800, 2,800 received, and that makes it 33,000. 33,600 minus 16,800. So the difference between the two is 16,800. So this is how we compute the taxable HRA. So these were some different varieties that we discussed here in practical terms, and I hope now it is clear that how you will be computing whatever the situation is, whether the employee is living in a metropolitan city or in a maybe non-metropolitan city, whatever, we will compute accordingly, maybe monthly basis, maybe annually basis, but the actual taxable HRA finally will have to be in annual basis. Okay, so that is to be there. So that is all for today's session about the HRA. We will move on to the next partially taxable allowances in the next session. Thank you for today. Thank you.